All right, let's get right into it. Meta is just about to drop its latest earnings report, and believe me, the stakes could not be higher. We're talking about a company spending tens of billions on an AI-powered future. The question is it a genius move or just a colossal gamble? Today, we're going to break down all the evidence ahead of the big reveal.
So, this is what it all boils down to. The question everyone is asking is pretty simple. Is this quarter going to be a story of soaring, unstoppable growth, fueled by AI and a big ad rebound? Or is all that massive spending finally going to cause the numbers to stumble? It really is a classic battle between offense and defense.
So here's our game plan for this explainer. First, we're going to look at the bull case, all the reasons investors are feeling really good. Then we'll flip the coin and dig into the bear case and the major risks. After that, we'll get into the nitty-gritty, the key numbers everyone's going to be watching. And finally, I'll give you my take on what it all means. Okay, first up, the bull case. This is the argument that Meta is basically an unstoppable growth engine right now, and honestly, there is some seriously compelling evidence to back this feeling up. The headline number for the bulls is right here. A massive 21.6% jump in revenue is expected compared to this time last year. Look, in an economy that's still kind of weird, that sort of top-line growth is just incredibly powerful. It absolutely grabs your attention. But what's actually driving it? Well, the core of the business, the ad machine, is just firing on all cylinders. Total ad spend is up big, but Instagram is the real superstar here, showing some just incredible growth. A lot of this is being pushed by online shopping, and this is critical, by Meta's new AI tools that are helping advertisers get a much better return on their investment. And hey, when ads work better, companies spend more. It's really that simple. And it's not just about the old apps either. Just look at this. 400 million people are now using Threads every single month. Wow, this is such a perfect example of Meta's superpower. They can launch something new and just tap into their massive network on Facebook and Instagram to grow it at a staggering speed. That's a competitive advantage that, very few companies on Earth actually have. So you might be wondering, how is Meta paying for all this super expensive AI stuff? Well, this is where it gets really clever. They've formed what's called a joint venture. It's basically a partnership with a firm called Blue Owl Capital. Now get this, Blue Owl is putting up 80% of the cash to build these new data centers. What that means is Meta gets all the hardware it needs to win the AI race, but they get to hang on to a huge amount of their own cash. It's a very, very smart financial move. All right, so that all sounds fantastic, but it's only half the story. Now we have to look at the bear case, because there are some major headwinds out there and some really serious risks that are challenging Meta's whole path forward. So this right here, this chart shows one of Meta's biggest internal challenges. We are all watching way more short-form video on Reels, but here's the catch. Ads on Reels are simply worth less money. A traditional ad in a video might make Meta, say, $5 for every 1,000 views, but a Reels ad might only bring in less than 3. So as the platform's most popular feature grows, it's actually dragging down the average value of its own ads. Kind of weird, right? And then there is the price tag on that ambition. Let's be clear, building the future of AI is astronomically expensive. Meta planning to spend up to $70 billion in 2025 alone, just on servers and data centers. I mean, that is a staggering amount of money that puts immense pressure on the company's bottom line. So what's the immediate result of all that spending? This. The company's operating margin, which is basically how much profit it makes on each dollar it sells, is expected to drop by 4 percentage points. So yeah, they're making more money, but all that spending is eating away at their actual profitability. And the headwinds just keep on coming. The Reality Labs division, the part building the metaverse, is expected to lose over $5.5 billion this quarter alone. On top of that, you've got regulators in Europe breathing down their necks with new rules. And then there's the biggest question of all. Will that $70 billion AI bet actually pay off with enough new revenue to justify the insane cost? Nobody knows for sure. Okay, so we've got the bull case, and we've got the bear case. Now let's look at the official scorecard. These are the specific numbers that everyone on Wall Street will be staring at to decide who won the debate when the report finally drops. This table right here, it really tells the whole story. Look at the top line. Revenue is expected to be up almost 22%. That is fantastic. But then your eyes drift down to net profit, and it's only growing about 8.5%. That gap is everything. Revenue is booming, but because of all that spending we've been talking about, that amazing growth isn't turning into equally amazing profits. And that is the central tension in Meta's story right now.
All right, let's try to bring this all home. It's time to weigh the evidence and figure out what this all could mean for the big announcement.
So, when you boil it all down, it comes to this. The bull case is all about that accelerating growth. The ad business, supercharged by AI, is roaring back to life. But the bear case is just as simple. That growth comes at a tremendous cost. The spending on AI and the metaverse is squeezing profits today for a payoff that might still be years and years away.
So, what's my take? Well, based on the pure strength we're seeing in the ad market, I think Meta is likely to beat those revenue expectations. The growth story just feels too strong right now. But the real drama on the earnings call won't be about revenue. It's going to be all about the costs. Investors are going to be hanging on every single word about future spending plans. For this quarter, though, I do expect that strong revenue number to be the main headline. Now, before we wrap up, I have to give a crucial disclaimer. I need to be absolutely crystal clear here. This is not investment advice. This whole analysis is just for educational and informational purposes. I am not a financial advisor, and at the end of the day, you are solely responsible for your own financial decisions. Please always do your own research. So, I'll leave you with this final thought. Meta is making a generation-defining bet. They are spending more money than the entire economies of some countries to build the future of AI and the metaverse. And the question we're all going to be asking for years to come is this: are they buying future dominance, or are they just funding a very, very expensive dream? Thanks for watching.